Welcome to Life in Real Estate. I'm here with my friend Tim Meduna.
Hello.
Tim is a loan officer with Northern Mortgage.
I am.
And today's podcast is something that does not get talked about enough.
No.
And really, there needs to be awareness and knowledge around this situation, because I've had clients who want to purchase a second home,
Yep.
whether for investment or vacation. And wow.
There's been a lot of changes
Right.
over the last couple of years.
So let's talk about what you need to think about if you want to purchase a second home.
Okay. So there's really three main things to talk about. What the changes did over the last couple of years, mainly during the COVID years, I guess, what changed there.
Okay.
What to think about with the payment.
Yep.
And then also you got to look at taxes.
Oof.
So let's talk about what changes really happened during the COVID years.
And is this more from a lending perspective, changes in?
Yes.
Okay.
So
perfect.
this is when a client calls me and says, I want to buy this vacation home up north. What do I need to do? So prior to COVID, just to give you a little bit of background, a second home was viewed very closely to a primary residency when it came to interest rates and such.
Okay.
Back then, it used to be maybe just 10% down.
Right.
But an interest rate would be very similar to where primaries were.
Got it. Okay.
COVID happened, all that craziness, but then they switched it to second homes being very closer to investment properties when it came to interest rates and really the down payments. I think my version of it is, things started getting crazy. If anybody's going to let a house go, if you have a first or a primary and a second home's usually the first thing to go.
Right.
Just from experience and such.
Right.
But so I think that's why they made it harder to buy when it came to like the Fannies, the Freddies of the world, made it harder to buy second homes and investments versus a primary residency, with inventory being low and such.
Okay. Oh, well, that makes sense.
So they want the inventory to go to primary purchases versus
because we have such a lack of inventory.
Correct.
Yeah.
So there are some loans out there you could do like a 15 to 20, but really that sweet spot on a second home is like a really 25% down. So that's been a big change because again, 5 years ago you could buy one with 10% down. Yep. And then turn it into investment if you want after that. But really, that's been the biggest change on the lending side, down payment wise.
Okay, that's big.
Huge.
Yeah. And is it tougher to qualify now?
It is. So we still have to look at, obviously, the debt to income ratio. Take whatever's coming in versus what's going out when it comes to your income. But also when you look at figuring out what that monthly payment's going to be, it's going to be a higher interest rate. And then also a big part of it, which is kind of combining 2 and 3, is the property taxes.
Yeah.
Property taxes.
I think that has been the biggest shock for my clients. Once they get over the hurdle of the lending restrictions, I've had them reach out to me after their first year, even though we talked about it, the lender and I both, depending if it was a cash situation, then we didn't have a lender, so we weren't going through all those details as much. But they have contacted me and said, Tammy, what the heck?
My payment jumped up.
Yeah, and my taxes are through the roof.
Yeah, depends on the township with the millage rates and such. My version of what's really going on is inventory's low.
Everywhere.
The sales aren't as crazy as they used to be.
Right.
So townships and such, they have a lot more time where they can get these tax updates quicker. But you're going to see the taxable values going up with this purchase price, whatever it ends up being. But also, when it goes from 100% to 0% homestead, that's a 40% usually increase in your tax or your tax bill.
I don't think a lot of people are aware of that.
No.
The homestead versus non-homestead and the difference. That's huge. When you talk 40%, that's significant.
Anytime anybody buys a house through us and, maybe the person hasn't sold the house they're looking to buy in 10 years, the taxable value is eventually going to change. It depends on what time of year you buy.
Right.
It could happen, like if they bought now, and we're filming this in March,
right?
Would it be really updated by the time the township does their stuff in June or July?
Right.
Probably not. So what I always tell clients is like, hey, here's your payment now. Here's probably what your future payment is going to look like.
Exactly.
But I always say, hey,
Yep.
instead of paying extra to principal, pay a little extra to your escrow account. So
Yep.
we can fund that account a little bit more so that when the tax bill does go up, the money's already in there. And
Right.
You know, because usually you'll get a letter in the mail that says,
here's your difference, pay it.
Here's three options. Pay the whole amount
Yep.
now, pay a little bit and your payment goes up a little bit, or your payment goes up a lot and you don't pay any. So at least you already have a lot of those funds in the account, so you don't get hit with
put it toward escrow.
Or just say, I'm going to do a separate checking account in your bank.
Knowing and anticipating that you're likely going to need it, and it could be more significant than
very
very
rarely does someone call me and say, my payment didn't jump up. It's more or less the phone call of, holy cow.
Yeah, I didn't.
Probably a different word, but holy cow, my payment went up a ton. And it's like, hey, remember I told you to do this?
Yep.
Well, yeah, I've been doing that. I'm like, yeah, see, it's not going to be as bad and such. So it's, I love using the word educate. And I think not everyone needs to be educated in this whole process, but a lot of people do.
Absolutely.
And with the market changing as much as it is on the lending side, with the real estate side, we got to be talking this more and having more in-depth conversations.
I agree. Educate, build awareness, build knowledge. Just bringing these things to our audience, I think, is so valuable because we both had experiences with so many clients that they're not aware of it.
Yeah.
And when we start educating them and making them aware, sometimes not only is it an uncomfortable situation, but it can put them in a situation where it's really a challenge to be able to move forward the way that they were really hoping for or anticipating.
When they're hearing it from myself, from you, it really shows how we're a team.
Yeah.
And we're really looking at the best for the client.
Exactly.
Making sure that they don't get scared with that large payment, or the house that they're buying, that it's not way out of their price point.
Right.
They're not wasting time looking at houses they don't qualify for.
Exactly.
We want to make sure that we put them in the best situation possible from the get-go to even 5 years down the road, that they understand everything and such.
Exactly. And I think to end this conversation, we're going to give you the good, the bad, and the ugly.
Exactly.
In the end, it's your decision, but we're just going to educate, help build awareness, and gain knowledge to help you make that decision in the end.
In the end, it's really all about the numbers.
It is.
And what you want to do. If we can qualify you.
What you really want.
It's your final decision, but if you want to still buy a second home, we're here to help.
Yeah.
Tammy will find you it. I'll finance it for you. But we'll still make sure you feel comfortable with it at the end.
Exactly.
So I think that's it.
Great. Thank you. Thanks, Tim.
Thank you.
High five.
All right.